Hi, and welcome to Corporate Insight's review of the current state of alternative lending options, specifically point-of-sale and post-purchase installment payment plans. This deck explores the rise of alternative personal lending products in the credit card and payment industries. We consider products such as buy now, pay later transactions, point-of-sale installment loans, and post-purchase payment plans. This exploration defines product offerings, outlines industry movements, and presents timelines for offerings from credit card industry incumbents and leaders, as well as from challengers and other competitors. You can see a selection of those firms on the right side of this slide. First, we'll cover point-of-sale loans, then move on to post-purchase plans. We consider all of these offerings to be payment flexibility tools, as they can afford customers alternatives to the strict payment schedules and often high interest charges of traditional credit cards. So, what is driving the adoption of these payment flexibility products? Point-of-sale installment plans present clear terms and fees, have the potential to grow brand awareness through partnerships, and are now an expected option in online shopping. These buy now, pay later transactions allow consumers to borrow with lower and often fixed rates than those available with their credit cards. Post-purchase payment plans similarly outline clearer terms and interest charges or fees, can strengthen brand perception, and boost prospect interest. We'll start with a review of point-of-sale installment payment plans. Here we present three of the most well-known original players in the space: Affirm, Afterpay, and Klarna. Affirm evaluates consumers' credit and offers interest-free and interest-based loans with no late payment fees. Klarna similarly checks consumers' credit, but provides multiple plan types: interest-free pay-in-4 or pay-in-full after 30 days plans, as well as 6 to 36-month financing backed by WebBank. Afterpay offers a similar pay-in-4 plan with no interest or fees and uniquely does not consider consumers' credit. These three institutions have risen to success over their multi-year histories, though the last 2 years alone show the firms expanding product offerings, moving into adjacent markets, raising funds, forming new partnerships, and considering and embarking on IPOs. Affirm, Afterpay, and Klarna are far from the only competitors in the alternative lending space, though. Other more well-known fintechs, massive card networks, and larger financial institutions are now expanding into the space. Goldman Sachs maintains buy now, pay later loans on JetBlue purchases and on Apple products through Apple Card. MasterCard, Visa, and Discover have formed partnerships to provide financing platforms for merchants on their card networks. PayPal and Synchrony launched their own pay-in-4 financing programs. Alliance Data Systems acquired Bread, and amount is now valued at over $1 billion. Next, we'll cover post-purchase installment payment plans, a space primarily inhabited by leading card issuing firms. American Express launched Planet in 2017, which lets users finance purchases of $100 or more, and most recently expanded to include purchases completed on AmexTravel.com. Citi debuted its product next, launching Citi Flex Pay in 2019. The tool similarly lets users finance purchases of $100 or more, though as of 2020, Citi also has a partnership with Amazon to provide point-of-sale loans on purchases with the firm. Chase, like American Express and Citi, lets users finance purchases of $100 or more with its My Chase plan, which debuted in 2020. Barclays launched Easy Pay, first on mobile and then the website in 2020. Lastly, U.S. Bank and Capital One began piloting post-installment payment planning services in the second half of 2021. As of February 2022, the firms have yet to announce a more widespread release. Newcomers and non-incumbents began offering similar services. PayPal offers interest-free financing for purchases over $99 through its credit card issuing partner Synchrony. Upgrade and Curve both offer unique product-based installment programs, while Alibaba focuses on financing for small businesses. Now we wonder, will the popularity of alternative lending options continue? As shown by the growth in payment flexibility options from fintechs, incumbents, and massive card networks, this alternative to traditional credit cards and loans has quickly become a formidable force in the payments industry, and we expect market saturation to continue. Incumbents are well positioned to offer post-purchase, merchant-agnostic offerings without relying on it for their business to succeed. Meanwhile, challengers face more of an uphill battle, often requiring diversification and expansions. Buy now, pay later transactions are also under heightened scrutiny. In February 2020, the UK announced it will begin regulating the industry to protect consumers by requiring firms to complete more comprehensive affordability checks. In December 2021, the US Consumer Financial Protection Bureau ordered 5 firms, Affirm, Afterpay, Klarna, PayPal, and Zip, to provide information on the risks and benefits of installment loans as part of an inquiry into the industry's potentially predatory practices. In January 2022, Experian announced it will launch a Buy Now, Pay Later bureau, becoming the first major credit bureau to offer a space for installment payment providers to report accounts and payment data. Despite the benefits of alternative lending products, only 17% of small business owners reported having used any of these services, according to a recent Corporate Insight survey. Notably and expectedly, younger business owners are more likely to use the services than older ones. Around half of the millennials and Gen Zers stated they had used one, compared to just 7% of boomers and 22% of Gen Xers. Separately, both Citi and Chase position their post-purchase payment plans as part of a suite, alongside loans against credit lines. These loans enable users to access funds faster, without a credit pull, and with much lower rates than cash advance APRs. My Chase plan offers loans beginning at $3,500 and requires users to specify the purpose. Meanwhile, Citi Flex Loan begins at $500, with user-specific terms and payment schedules. So far, competition is sparse here, with only Fiserv's FlexLine Advance tool, which offers the same features as Chase and Citi. Notably, Fiserv is well positioned to provide this back-end technology to partnering financial institutions, an area it already succeeds in with its check-free bill payment service. A partnership saves the institutions from the time and expense of building out proprietary platforms like Chase and Citi did. A bit more background about Corporate Insight and Credit Card Monitor. Credit Card Monitor began in 2001 and tracks the online customer experience from leading credit card issuers. We examine both the prospective experience in terms of available card products as well as the authenticated cardholder experience. Here is the coverage group of firms that we track for Credit Card Monitor. Please reach out with any questions about Corporate Insight and our research services.